Welcome once again to today's webinar, Trading Gold and the German Dax. Trading Gold and the German Dax. Now, quickly before we go into this, I just want to make sure that we remember the objectives of this particular class, right? We had shared it earlier. I'm going to just retouch it one more time so we're back on the same page, right? What are the objectives, right? In this class, we're going to talk about the key drivers of gold and German Dax. Basically, an introduction into what they are, the assets that they are, the major drivers, what you should pay attention to, right, on this particular asset. We're going to discuss that. And then we're going to also discuss, number two, the role of the dollar when it comes to trading these two assets, right? Particularly for gold and the role of earning season when it comes to trading the German Dax. And then we're going to talk about number three, tips when it comes to trading highly volatile assets, right? Like gold, maybe even extended to highly volatile events generally, right? What are the tips that you could, get that could help aid and make the job a lot easier? And these are the things that we're going to discuss in our class today, in this particular webinar today, right? Please don't forget that the question box is open, the Q&A section is open. So if at any point in time you have any questions whatsoever, you can reach out and then we can look into it and attend to them. Right now, quickly, a lot of traders tend to trade gold a lot, right? I mean, if you take a survey of 10 traders, right? As I know of Nigerian traders, you could say very clearly that about 4 to 5 of them like or would like to trade gold. It's a very popular asset. And one of the reasons why it's very popular, it's the volatility that it comes with. Traders tend to believe that, it gives good reward for the time spent trading it. When prices move on gold, it moves quite well. And when prices move quite well, when you're right, you make good profit, right? Although they also understand the volatility that comes, the risk that comes with volatility as well, that if price is not going the way you expect, then you're also taking a bigger risk trading a highly volatile instrument like gold. Now, gold is much popular, but maybe the German DAX is not as popular among some traders, right? And I'm going to quickly take time to introduce us to what the German DAX exactly is, what we need to know about it, and then why I added it here as well. Now, it's important that, we also are aware that a lot of traders actually trade German DAX. You'll be surprised at the number, right? Maybe not a lot of, maybe you don't, but a lot of traders do. And I'm sure in this class here, you probably have one or two people that also trade the German DAX. It can also be an interesting asset to trade, and it can also provide opportunities just like you can on different assets. Now, gold needs no further introduction, right? Obviously, it's a metal, right? Volatile one at that, and it can be traded on trading platform. The symbol for gold on the trading platform is XAU USD. When you're checking your trading platform and you see XAU USD, we're referring to gold. We also have gold, silver rather, and other metals, but that's gold. It doesn't need so much introduction. But the German DAX, now on our platform, on the HFM platform, you're going to see the German DAX as GER 40 now. It used to be GER 30. Now it's GER 40. Now, the German DAX is an example of an index. What is an index? An index basically measures, right, or tracks the performance of a group of assets. Instead of trading a single company stock, for example, you can trade an index that measures different companies all in one. One of the very popular indices that a lot of traders trade is the S&P 500, what we have as US 500 on our platform. It's simply an index that measures the top 500 companies in the US in that sense, right? In this case, the one for Germany, the German DAX, is an index that measures, or is a stock index that measures about or represents about 40 of the biggest German companies, right, that trade on the exchange, Frankfurt Exchange. So the idea is different German companies put together, about 40 of them, to produce an index that we can trade. So by trading that index, you're basically trading the entire 40 companies in one, with the same balance, with the same risk, all in one, rather than trying to trade all of them individually. Individually. It says here that indices trading refers to buying and selling of financial instruments that basically track the performance of a group of stocks, not just only stocks, right? You could also have other financial assets as well. You have indices for currencies, right? Rather than them, rather than trading them individually. That's the idea. Now, the German Dax, that Dax there, I can't pronounce this, but I'm sure you can see it on the screen. If you're German in the class, or you spend some time in Germany, or you had the privilege of learning German, I'm sure you can better pronounce this compared to me, but I can't. But that's the full meaning of the DAX, right? It's a stock index based out of Germany. Now we have other stock indices as well. We have the one for France, France 40. We have the one for that's the CACs, CAC, you could call it. We have the one for the whole Eurozone, the Euro stock. We have like three for the US 500, US 30, and US 100. That's the Nasdaq. Right. We have the one for Japan. That's the JPN 225. Right. We have stock indices for Switzerland, for China, for Australia. There's just so many of them. But this particular one that we're referring to, measures the top biggest 40 companies in the German index. So what are the companies in there? There's so many of them. You can check online, just Google companies in the German 40 index. You can see loads and loads of them. But I just put some popular ones in that list right here on my screen, right? Companies like Adidas. I'm sure we're familiar with Adidas, right? Companies like Airbus. Airbus is an airplane um, company, basically. BMW. I'm sure we know the German luxury car. Right. Well, I call it, oh yeah, we could call it luxury car, right? Mercedes-Benz Group. I'm sure that's very we're familiar with that as well. Siemens, Allianz, and there's just so many of them. I just put a few popular ones here so that we can have an idea. So these top companies in Germany, all 40 of them, right? Not yeah, all 40 of the biggest companies in Germany put together, stock price put together to form the German DAX. So by trading the German DAX, you get exposure to all these companies once and for all. And it can be very interesting to trade because, it's affected by major factors that also affect other things, right? We'll get into that shortly. Currencies, commodities, it cuts across these assets. And the general stock market is also there. Whatever is happening in the general stock market also affects the German DAX and so on and so forth, right? Now, before we go further into this, I want to believe that we have a fair idea what the German DAX represents now. I want to believe that we have a fair idea what the German DAX represents so that we can be sure we are on the same page. Just need a message or two in the Q&A section so that I'm sure that we are on the same page, right? The German DAX that I've tried to explain on our platform, it's the GER 40, right? I want to be sure that we have a better idea of what we're talking about. All right, I can see a couple of answers. All right, thank you, thank you, thank you. All right, thank you. See a couple of answers there. Thank you. All right. Now, what are the assets or what are the key drivers for assets like the German DAX as well as even gold? Let me get, uh, let me see if I can write this. German DAX, that's the GR40. All right. Now, the German DAX, because it is stocks of companies put together in one, of course, the economic situation in the country where these companies are, domicile, are found, or like are present rather, right, would also affect businesses and affect, by extension, these companies that we're referring to. I mean, it's a German index. These companies are in Germany or are based in Germany fully. So whatever happens with these companies also has its own role. The economy in Germany also has its own major role to play when it comes to trading the German DAX. When the European economy is doing well, the currencies tell, obviously, but by extension, businesses also thrive. And these are the top companies in Germany. So when you have positive economic numbers, when you have positive economic indicators, unemployment is lower, inflation is moderate, growth is massive, you know, the retailers are making sales, manufacturing indices are growing good. When you have positive economic data, right, for Germany, not just Germany, but for the entire EU as well. I'm sure you know that Germany is also one of the biggest trading partner for Germany as well, is EU, the entire European Union. Right. So obviously, whatever happens with these economies, the data side has this impact to play on the currency, so on the asset rather, German Dax. So if you're having positive economic numbers print, right, a positive outlook for the European economy, and by extension, more important, the German economy, because Germany being the biggest economy in Europe has a major influence on the entire EU and the entire European Union, right? The Eurozone in general. So when you have positive economic indicators, you can expect the German index to appreciate. This year alone, right, we've had indices, global market indices appreciate massively. And the German DAX has not been left behind. It has also moved up massively as well. So by understanding that, you know, clear buyers. And one of the major things you want to look out for here is going into the year, major central banks are looking to start their cutting cycle. Some have started, right? And some are looking to continue that, right? That is better because when you cut interest rates, it helps, companies do better, right? Cost of borrowing is lower, and all that. There's more money in the economy that can drive growth. So it helps companies. And when it helps companies, indices that measure the value of these companies in that sense, or the price, whatever it is, performance basically would also appreciate. So economic indicators for Germany particularly, and even the entire EU, affects the German DAX. Not just positive, on the negative side too, it does. So if you want to trade the German DAX, one of the major things you want to pay attention to would be the economic indicators, economic data. Another thing you want to pay a lot of attention to would be what we call corporate earnings. What do I mean by corporate earnings? These are companies, don't forget. And these companies report their financials every quarter, right? We have an earnings season where major companies around the world release their financials for the market to see, right? For the investors, basically communicate. We have it here in Nigeria as well, and that's how it is across the world. Now, when companies, major companies in the index, particularly the ones that have a heavy weighting or bigger companies in the index, report their financials, it can also drive the index higher or lower. If major companies like what I mentioned, Adidas, Airbus, BMW, Deutsche Bank, right, Siemens, Allianz Arena, the Mercedes-Benz Group, and so on, if they report their earnings and as their earnings are coming out, it's showing that, their revenue has increased massively. It's showing that their earnings per share, their profit has improved massively. Their customer base has improved massively. And the directors of these companies also have a positive outlook for the companies going into the next quarter, the next year, the next couple of years. That's a good thing. It makes the company individual stocks appreciate. And by extension, the German DAX itself also appreciate because it simply measures the performance of these assets. The other way as well, if you have the companies release their earnings reports and then you have negative numbers, or you expect that would also affect the German DAX negatively. So whatever happens with these companies, you can always find it. Now, you can always find an earnings calendar. If you go to our website, for example, hfm.com, just in case you're wondering where you can find calendar. If you come to the tools and education, we have an economic calendar here. Probably have an earnings calendar. I don't know where I can find it now. I'll take my time and look for it, but I'm sure we can find it. We can find it on our website, right? Aside from this, where we have the economic calendar, we also have, if you log in, you can also find the earnings calendar. But outside that, you can also check when you're trying to do your research normally and you're trying to do your normal analysis. When it's earnings season, everybody talks about earnings season. And you can know the dates and time that these companies will release their earnings report for that particular quarter. So you can know. Another thing that also drives the German DAX, if you want to trade the German DAX, right, you're looking to go into it. And nothing that can also help you know what's going on, what to do, what to buy or sell, is global market trends. What do I mean by global market trends? Whatever is happening globally, the global economic cycle in the world, right? The global, developments, right, can also affect the market sentiment and by extension, the indices as well under that. When you had the whole Russia-Ukraine war, for example, that's an example. That was a global market, event, right? Or a global market theme at the time. Now, something like that affected the Eurozone massively. And one of the reasons why it did, not just because we have Russia and co in that space, but one of the major reasons why it did was that Russia was a major supplier of energy to Europe, right? And when you have such war and sanctions and all of that, energy costs naturally go up and it affects companies, affects businesses, affects individuals, affects the economy at large, right? The German DAX would also suffer from something like that, right? When you're having major companies having to leave, let's say when we had Brexit at the time as well, obviously these companies in Germany do a lot of business with the UK. Right. So when that is happening, you're trying to separate that, the trade deal and all of that, it's going to affect how they do business as well across. That also can affect. COVID-19 and lockdowns, major global market themes can also affect. Now, when the global economy is in the recovery phase, right, it also helps something like the German DAX. Because as the global economy is recovering, you expect businesses, people to also have more to spend, improve as well in their performance, in their earnings. That can also help the German DAX appreciate, right? When you also have central banks, when the central bank overall policy is going into the cutting season, where we're in a cutting cycle, where they're cutting interest rates and getting more loose monetary policies, that also has its own effect on the German DAX. It appreciates. But when you have central banks increasing interest rates or expecting to increase interest rate globally, particularly the European Central Bank, right, that in itself has a negative impact on something like the German DAX. So you have that. And when you look at all these things, right, these factors, sentiment too, when you have positive market sentiment, because in a positive market environment, on the back of positive developments, makes equities appreciate. German DAX is an example of an equity. And it also, an index rather, yes, equity indices is the same thing. And it also appreciates as well in that space. And obviously, a negative market sentiment has its own negative effect. So the idea is when you want to trade an asset like the German DAX, you want to pay attention to what's going on in the Eurozone, what's going on in Germany as referring to their economies and the data, what's going on to the individual companies in that index as resulting with their earnings. Now, it doesn't only have to be global earnings generally. If Mercedes-Benz uniquely has a particular problem, or let's say Adidas, being that it's a major part of the index, has a particular issue, good or bad, really, it can also drag the entire index higher or lower depending on the situation. So corporate earnings, individual developments with these companies can also affect the German DAX, and global market themes as well as market sentiment can also affect the German DAX. Gold is another interesting part of this, right? I've kind of answered question number two, or key point number two, in trying to answer the first part where I talked about earnings season, right? I mean, earnings season has its effect on these assets, and I've explained why. Because it's simply reporting when these companies or the company's performance over the last quarter, and it talks a lot about their revenue, their profits, their earnings per share. Talks a lot about the sentiment around it, the vision of the company, where the management see the company going forward. So all of these things has its own role to play. But then moving and crossing over to gold. How about gold? Now I mentioned earlier that the symbol for gold. Let me see if I can write this down here so that we can also have that XAUUSD. So that's the symbol for it. If you're trying to look for it on the trading platform, I think before we go, I would also open the chart just to show us these two assets so we can see what we're referring to. Now, gold is another interesting asset. I mean, the volatility around gold makes it a very, very popular choice among traders, and traders like to trade assets like gold. Now, trading assets like gold, right? Yes, it's volatile. When it moves, it moves. And when it's moving in your direction, prices move, make a lot of profit, right? Or you make a lot of profit in that sense because of the pace of price movement and the price per pip and the amount of pips that it moves in just a single trust, right? But it's important to also know the drivers of assets, including gold. Now, what exactly drives gold? The US is a major factor to consider when you're trading an asset like gold. Generally, commodities, when trading commodities generally, you must consider the US because commodities are priced in the US dollar. And whatever happens with the US dollar has its own impact on these so-called assets. When the US dollar appreciates, other currencies or other countries would need more of their currency to buy the same units of commodities. Because they need more, it reduces their demand in that sense. So when the dollar appreciates in value, ideally, commodities fall in that sense. I'll see if I can illustrate that for you. Let me see if I can quickly, write that out. Let's assume as an example, right? Let's assume you needed $1. Let's say $1 is equal to, or let's say €2 is equal to $1. That's you get $1 for every €2, as an example. As an example, right? Now, gold is priced in USD, right? Let me just get this done on another page entirely so I don't mess up my notes. All right. Let me see if I can get this done. On a separate page, just scroll down to the bottom and create a new space for it. Now let's assume I'm trying to explain that why commodities have an inverse relationship with the US dollar. Right? Let's assume €2. Or let's just make it very simple. €1 is equal to $1. And don't forget that is priced, gold and other commodities are priced in USD. So another assumption, let's say to buy 1 ounce of gold, 1 ounce of gold, you need to pay $1 as well, literally. Let's assume this is the assumption. Now, if that's the case, it means that Europeans, this means that €1 equal to $1. Don't forget, we already had that. And that means that €1 can also buy 1 ounce of gold, right? That's what it means. Let's just use the shortcut for ounce. I think it's OZ. That's like the what's it called? So I start writing ounce of gold in full, right? So 1 ounce of gold. All right. So that's it. Now, in a case where the dollar appreciates in value, if the dollar appreciates in value, if USD appreciates, all right, there you go. So that's we are looking at. I'm trying to I hope we are still following me. I'm trying to make sure that we're on the same page. Please just follow me, please. All right. All right. Thank you. Please make sure you're following me. Are we still on the same page? I want to make sure that I'm not losing anybody. We're still on the same page. You can still hear me clearly. Is that correct? All right. Thank you. Thank you. I got the answer in it. Thank you. Thank you. Now, if the dollar appreciates such that you now need €2 to buy $1, Then 1 euro can no longer buy 1 ounce of gold anymore, right? 1 euro would now only be able to afford half ounce of gold because dollars appreciated. So that lower demand makes the price of gold to fall when dollar appreciates. But in a case where USD depreciates, such that 1 euro now costs or 2 US dollar. If this happens, then 1 euro can now do more. So now in this case, euro, that same 1 euro can now buy 2 ounces of gold. So because of this, right, the way the dollar appreciates and depreciates has its impact, has its role to play with gold. When dollar appreciates, let me say, therefore, there's a way we used to write therefore. I can't remember. Okay, it was like three dots or something. When USD appreciates, gold falls because of lower demand. Or let's just leave that out. Right. And then when dollar depreciates, gold rises. There you go. Right. So you have that. So obviously, factors that influence the dollar, right? This is it. Let me put it on the screen for a few moments in case anybody needs that. Factors that influence the US dollar has its impact as well on gold. Whatever goes on with the dollar when it comes to, the economy, data, policy, yields, bond market, whatever affects the dollar itself directly also has its own impact on gold. And it's an inverse relationship. So when dollar is going up, you expect something like gold to drop. When dollar is going down, you expect something like gold to appreciate. And that's why you can always try and pay attention to, or you always notice that inverse relationship. This is why. Now, for other assets like, commodities like crude oil, because they all have other drivers too, pure demand and supply too. Now, it may not be as evident as it is with gold, but it's something that you want to have at the back of your mind. I hope that makes sense. Now, going back to what I was talking about. So, the dollar, the US economic indicators, inflation, interest rates, right, also has its impact to play on. If it affects the dollar positively, then gold falls. If it affects gold negatively, affect the dollar negatively, then gold appreciates. But please, you must always have at the back of your mind that correlations are not perfect. Correlations are not 100%. You could have a lot of situations where the correlation is strong. And there are times when the correlation is not as strong, but it's a factor you want to have at the back of your mind when you trade, right? Geopolitical events, gold also serves as a safe haven asset. Gold also serves as a safe haven asset. So when you have global trouble, massive trouble, serious trouble, right? Assets like gold tend to attract bids, attract buying, attract demand, and hence the value appreciates when you have a negative condition in the market, massively negative. Gold appreciates when you have a negative condition in the market, negative sentiments in the market, negative developments in the market, or bad global market themes. When COVID struck, assets like gold tend to appreciate, right? So there's that. You want to have that at the back of your mind. When you have major trouble like that, you want to also see gold also doing its thing, right? Appreciating that sense. And on the other hand, too, when we have positive developments, right? Good news here and there, geopolitical events, positive things, whatever the case is as well. Um, positive market sentiment, gold tends to lose value in that case as well. I've mentioned the US dollar and yields are also important. Well, because when I say yields, I'm referring to bond yields, right? Bond yields. Basically, the interest rates on bonds, not just the interest rate, but all the total earnings on bonds, right? The yield. It also has an effect as well on gold. When yields rise, gold falls. Because when yields rise, it pulls the dollar alongside. So when yields go up, the dollar gold falls, and the opposite as well. When yield go down, gold rises. Now, you may not really need yield that much, but I just wanted to make sure that it was mentioned. So the idea is these assets, these are the drive, these are the major, just three, there could be more, but these are like the major, factors that influence the price of these assets in question. So if you want to trade them, it's important to understand what even makes them tick, what makes them move. When someone makes them tick, then you can also know what to look out for, what to pay attention to be able to trade it and trade it well as well. I hope I am communicating. So we've gotten through number one, we've gotten through number two. Number three, when you trade volatile assets like gold, or before we even do number three, let me quickly cross over to the chart and just show you what these assets look like. Just look at it very briefly on the chart, and then we can continue our discussion. I understand that some of us may have some questions. We probably have sent loads and loads and loads of questions, right? I will attend to them very quickly. Just give me a few moments. Yes, 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 yes. All right. I don't have the tab for questions opened up, but if you have any questions so that you don't forget, just keep sending them, you know, um, my way so that I would attend to them. Okay. Now, I was going to show you the charts very quickly. All right. Now, this is my chart. This is my trading platform. If you're very new to this and you don't know how to use the trading platform, I would need you to try to join our foundation class. Typically, it runs weekly, Mondays to Wednesdays, online like this, but it starts at 3 p.m. local time. So you could try to join. If you have an account already with HFM, you can reach out to your account managers and then they can provide you with a link to join, typically ready on Mondays. But if you don't have an account with HFM just yet, then you would need to open one. Going to our website, hfm.com. hfm.com. You can register, fill the form, sign up basically. And when you do that, you will also see when you do that and register and complete your registration, your account manager reaches out to you, and then you can always, request for the link to join the training. So there's that. Now, this is what the German Dax looks like. Over the through the month of June, basically, let me close this up. Through the month of June, basically, we've had a roller coaster. It's been, let me see how I can. This is June. Okay, this is where June starts from. So it's been a roller coaster for the month of June, right? Basically. Right. Yeah, overall it went down, but aside from the massive downside that we suffered around this was 12, 13, 15, around the middle of June, right? We're back in that range, right? But over the year when we've had that upside in equities, we've continued to see upside in an asset like German Dax as well, right? If you just use a Fibonacci, for example, to just note from the bottom right here to the top right here, we notice that price pulled back to the 50% level and continued higher as well. It pulled back as well to the 38.2 levels and moved higher. So I just want to just mention this very briefly, but our class today is not about technical analysis, but just to mention that this is what it looks like. This is the name, the German DAX, the German 40, although this is the futures contract, by the way, but then this is the German 40, and you can go on and on and on. Over the last, look at it, right? All through the recovery period this is from September 2022, we've had consistent upside on assets like this, right? And then when we had a downside through 2021, right, we also had it continue like that. So my point is, usually they have clean trends, and loads of opportunities can also be on assets like this when you trade, right? Loads of opportunities can be on assets like this when you trade. You just have to understand what's going on at that time. This was COVID, I guess. Yeah, so it was March 2020. So it's COVID, right? February, March as well. So we started from late December, thereabouts. Oh, this was February rather. So from February through to March, right, we had that massive fall. But when we started talking about recovery and all of that, it continued to move higher, 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 right? So when central bank started to increase interest rates, so we had, high inflation problem, and all of that started to happen. We had the downside and downside and downside. Now we're looking to cut rates again. So it's just been a whole story, right? But paying attention to this would have helped you to find opportunities and make some money for yourself, right? I'm just introducing it to you in case you've not been trying to trade the German DAX. It could also provide good opportunities because the drivers are straightforward. And usually when they pick a trend, they just continue to move in that direction for a while. But that's just on one side, right? The same technical analysis that goes into trading other assets can also go into trading something like the German DAX, right? Something like gold as well. Now, gold itself for some time now, over the last 2 months, 3 months, right, has been just a whole roller coaster, right? You look at gold, this is the last, basically since the month of April, May, and June. It's just been in one space. It hasn't really done much. Just continue to bounce off this range through this time, right? Yeah, we need more clarity on where the Federal Reserve will go next with their interest rate, but it's not really been an easy call to make for the likes of gold. The dollar index, on the other hand, if you look at it in that 1 month space, right, for those 3 months, has also done something similar. Where is it? Right? So, I mean, you just have to look at it side by side and you have an idea of what I'm talking about. Through April, May, and June, you had a range basically on gold. Dollar index measures, there's also an index that measures the relative strength of the dollar as well. You can see we also had that range as well in the month of for the last 3 months on the asset like so the same way you apply technical analysis the same way really you can also do the same thing for the German DAX and also look to explore other equities as well, right? It's not only forex trading. HFM, hot forex turning to HFM is to just show that, oh, you could trade other assets as well on our platform. So you could also explore equities. There are other assets, commodities, metals, that you could also try to trade energies. They could also try to trade on our platform. But that's just on the side. Just wanted to show this to you right here. Now, quickly, the final part of our presentation would now be how do we manage when we trade high volatile events? Gold assets, gold can be volatile. The German DAX, maybe not as much, but obviously you want to also have that at the back of your mind. Now, when it comes to trading high volatile events, you must understand that when prices move, assets rather, when prices move, they move well. When prices move, they move well. So you must at all times manage your risk. It's something that we cannot really overemphasize. Managing your risk is key, particularly because if you don't manage your risk and you're wrong, if price moves, it's going to move well. And if that happens, you end up taking a bigger loss than you probably want. So managing your risk, setting your stop losses, trading appropriate volume is absolutely key when you trade assets that are volatile, particularly something like gold. Another thing I said, you want to avoid over trading. The fact that you have a low margin requirement, access to high leverage to open multiple positions, regardless of, without necessarily having, or let's just say, because leverage allows you to, does not mean you should. Does not mean you should. Although this is very relative to our risk appetite. I mean, we can also obviously consider our risk appetite, but you want to make sure that you do not overly expose yourself when you trade. Avoid over trading. That's also a part of risk management, but you want to make sure that you're not overly pushing yourself when it comes to assets like gold. Now, if your trading style requires that you take big risk, but you understand what that comes with, and that's your preferred style, maybe because the capital you're trading with is a risk capital, then by all means, as long as you understand what you're doing. But ideally, when you trade high volatile assets like gold, you want to make sure you're not over trading, you're not opening too many positions, right? You're monitoring your volume calculation, paying attention to the lot size that you're trading, and you're managing your risk in general, setting your stop loss, right? And then I said, understand the driver. It's not enough to just say you like trading gold. You want to know what is currently going on. That in itself is a good way to manage your risk because it already puts you in line with the right direction in the market. It already puts you in line with the right direction in the market. So it's something that I want you to always pay attention to when you trade. It's just a little thing I wanted to just share with you this afternoon to make sure that you understand clearly that, oh, you can trade an asset called the German DAX if you're not aware. And then the drivers, the major factors that influences these assets, as well as a few tips you can just add, put at the back of your mind when you trade volatile assets. I want to believe that we have been able to pass some information that makes some sense or add some value to what you already know or to your trading as well. I know I have loads and loads and loads of questions. I want to see how I can cover them in the little time that we have. Let's quickly run through that very quickly. Please, at this point, you can send in your questions. We've talked about what we have for today. You can send in your questions and I can see how I can attend to majority of them right before we call it a day. All right. This one says, let me see if I can scroll up a bit. Okay, most of the earliest questions are just about my screen is visible. You can see it loud and clear. All right, thank you. Thank you very much. You hear me? Thank you. Now, this one says, okay, hello. This one says, I trust that this Zoom session is being recorded so that one can listen to it again and again in view of poor data network being experienced. Oh, yes. This particular webinar is recorded and it would also be uploaded to our YouTube handle. You can always check back on HFM Nigeria on YouTube. If you go to youtube.com and you search for HFM Nigeria, you will see our YouTube handle. You can follow, subscribe, and put on your notification so that every time we post a new video, you'll be notified. But then you can always catch this webinar as well as our past webinars. By the way, these webinars hold every Friday, right? We try to make sure we have a webinar out on Fridays. We have an interesting set of questions, webinars through quarter 3 already. Keep track of our social media handles, HFM Nigeria, across all social media platforms. And you can see the list, you can pay attention to them, and then you can as well, you can just keep getting the opportunity to learn new things, right? So this also answers the question. Yes, please, will there be a recorded video? There is a recorded video. It will be uploaded on our YouTube handle, HFM Nigeria. All right, this one says very quickly, the class is making sense. Okay, thank you. Thank you for that. I believe you're getting some value, and I'm sure that's the same for majority of us in the class. All right, thank you. For the past 2 months, gold has traded in the same direction with the dollar. What happened? I mean, I basically showed us that we've seen a range in both assets. It's because you have that, correlation between them. So when dollar is going down, gold is moving higher. I showed us that on the charts just not long from now. All right. We haven't treated number 2 individually, though you touched it briefly. I did. I mean, I talked about how the dollar affects gold, and I talked about how earnings season affects the German Dax. Does one need much capital to trade gold? If yes, how much do we suggest that you can start with? Well, I mean, the amount to start your account with is relative based on your own capacity. The minimum deposit at HFM is $5. To trade gold, we can check actually. Let's see. If you go to our website, let's quickly cross over there and show you. I just want to show you that you can also have that information fully as you want it. If you go to our website, under tools and education, you have a trading calculator. Under tools and education, you have a trading calculator. So if you go there and then you just check, I think position size calculator, that should give that to you. Want to know the margin? That's how much you're required to use to trade gold. So you go to position size calculator. There you go. You want to know the margin right here. Position size calculator. When you check this out, it's coming up. Okay. So you can calculate the margin. Simply put your account currency, dollar account, euro account, naira account, whatever the case is. Put your leverage on your account. Is it 1 to 1, 1 to 1,000, 1 to 2,000? You put it in there, whatever the case is. How are you trading, right? You can select Forex, and then let's assume we have a leverage of 1 to 1,000, right? Right. And then what are you trading? Let's say we're trading gold. We want to know for gold. So we have metals. Let's select gold, XAU, USD. I mentioned that. What volume are you trying to trade? So I want to trade one lot on gold, and I calculate I'll need to have at least 200 and something dollars in my account. If I want to trade the minimum lot, 0.01, and I calculate, right, I need to have like $2 thereabouts. So you can know the margin required. But to answer your question of do you need large capital? Because gold can be volatile. Some traders prefer to have, a larger capital base to account for pullbacks and all of that, right? But that's relative. Like I said, you can see the minimum amount required to open a position on gold around $2 thereabout. That's even for 1 to 1,000 leverage. So if I have a bigger leverage, maybe I would need something smaller as well. But that's about that, right? So I can't suggest how much to start with. That depends on you, but you have the idea of what I'm referring to. All right. What's the trend on the GR40 right now? GR49, I think I showed us that now. I showed, let me see if I can go back to the charts. I think I did. I did show that to us. That right now we were just price has been moving up for the whole year. Let me see if I can cross over to the chart and have us see that. Price has been going up for the whole year, basically, right? And then we've had this upside continuing from January up to, although in this month we had a bit of a roller coaster. We've had some retracement from middle of last month. Are currently retracing, right? Equity market is also still in the middle of deciding what the central banks will do with rates going forward. Once we start having serious rate cuts across all the central banks, right, you can continue to see that upside continue to trend as well. How do you check the pips? On the website as well, you also have that. Amongst the calculators, you also have a calculator to check the number of pips. If you go to the same calculator where we are, and then you check pip value, you can check. If you go to pip value calculator, put the asset in question. We have the German Dax, where's it? Indices. The German Dax, GR40. Can anybody see it? I am not seeing it at this time. GR40. Okay, here you go. So let's just pick one. And then what's the lot you're trying to trade? So for the minimum, for let's say one lot, trying to trade one lot, for example, and you calculate, right? Each pip is worth about 1 cent on one lot. But you know, when German DAX moves, it moves a lot. I'll give you context to this. If you look at the German DAX now, this today alone, if you look at the German DAX today alone, let's just look at today. All right. Today, the German DAX has moved already, let's say from the open, right, to the top, the low to the high, about 1,000, almost 1,200 pips. So that gives you context. So when you're saying that if you're trading a lot, right, one pip is 1 cent, and then you can do the maths as well. So you also have that on the website. You can check. Our time is up. Let me quickly run through this because of our time. Please come again. Okay, I think I've explained this already. This was asked during the class. The drivers for German DAX. We mentioned the euro data for Europe, for Germany, earnings season. That's what the companies report as their financials. I also talk about global market themes as well, right? I've mentioned the pip value. You can check. It's not as high as that of gold, but it moves much more in terms of number of pips. So you can check that as well. Please, what is the current market sentiment in terms of gold? Right now, markets are the major theme in the market is not the Gaza situation. We've moved past that a long time. The major theme in the markets is how soon central banks will start cutting interest rates or increase the pace at which they are cutting interest rates. But because we are still in a linger mode, most central banks are waiting for more data, wait and see mode. That's why you're seeing gold in the range. Once the Federal Reserve particularly gets back on track with their cutting interest rates, then you expect something like gold to also do better in that environment. Good afternoon. I noticed you can trade the minimum lot on the German DAX. Let's be sure about that. Okay, then you can't. You can trade zero point 0.1. That's the minimum, right? But if you look at it, one lot, one pip is about 1 cent. So it's still, it's not the same as zero point 0.1 on currencies. It's different. You can use the calculators that we already put up to check that as well. Um, you said gold and USD are safe assets. Meanwhile, gold rises, yes. Gold is also a safe asset like the dollar is. But it depends on the driver. Whatever the main driver is for that asset will determine how gold also reacts. If we have a massive negative sentiment, gold and dollar would go up together. I'm saying that correlations are not perfect, are not 100%, don't happen all the time. But if the driver in the market is for the dollar, then you expect gold to behave opposite to that. So it depends on what the driver is. There are cases where the driver is sentiment, negative things in the market, then both assets play into their safe haven capacity and appreciates together. But in the case where the dollar is the major driver, right? Something's going on with USD, is rising in that case, and you expect gold to fall in that particular situation. So it depends on what the major driver is. Where can we get fundamental news for gold and crude oil? If you check your regular news platforms, some of them give us um, different segments on forex, segments on commodities, and so on and so forth. You can as well check them out. Those of us that are using what's it called, that have been through our foundation course would obviously know more and more on this particular part of this. We've talked about the different platforms where you can find news as well. On our website, if you go to hfm.com, right under tools and education, you can see market news. So you can check that as well. I'm seeing our time is up. Thank you, sir. I just wanted to ask if it is recorded because you have answered it. Okay, I've already done that. I must say, HFM is amazing, creating sessions like this for training. Thank you. God bless HFM. Thank you. God bless you too, as well. What's the difference between the GR40 and the GR40 that F? I forgot to even mention. The German Dax is not open 24 hours. It typically opens around 9 a.m. Salva time at 7 a.m. Nigerian time currently, right? On the platform, not 24 hours like you have. Now, the GR40 is a futures contract. A futures contract is a contract that is, you know, how do I explain it? Let's say an agreement to strike a deal or do a transaction at a later date at a later price. So the prices are slightly different. The prices are slightly different, but basically they move the same way. They're just two single assets. One is a spot contract, the other one is a futures contract. Thank you, HFM. I'm enjoying your platform as a beginner. Thank you. God bless you. Thank you very much. Thank you for that. Please, I want to start trading. Are there webinars to watch for beginners? Yes, there are. We have a foundation course that runs weekly. Once you open an account with HFM, you can always join that particular foundation course. Just sign up, reach out to your account managers, or let me know as well, and then we can also join, help you get started. You go to our website, hfm.com, and register. You can get started from there, right? How can I identify the base and quotes? Now, it's not a currency pair, it's a single asset. So the price is the price. There is when you have currency pairs where there are two currencies in the pair that you refer to quote and base currency. All right. You said you sent me a message on Telegram. I'll attend to that right there. I'm trying to see how that please, sir, I don't get the link from Monday to Wednesday webinar sessions. You need to request this from your account manager. You need to request this from your account manager. So please do that, and they can send it to you. Usually ready on Mondays, and there you have it. Okay. All right. I can see that we still have loads and loads of questions. Um, I don't have all the time to attend to it. The webinar should last an hour because we need to upload it. So at this point, we're going to come to the end. We're going to wrap up the session, right? Wrap up the session right now. I want to thank you, everybody, for joining us. I would send the link to my chat on Telegram so that if you need to ask further questions, you can send them to me and I would attend to all of them. But at this point, I want to say thank you very much for joining me for the 1 hour session. I want to believe that you've learned something new as it relates to gold, trading gold, and trading the German Dax, right? Come Friday next week, we're going to have another webinar session. We'll post it as well on the HFM Telegram channel, and then we can also, continue to push this and get better, get it to improve and improve our trading. So thank you very much for joining me this afternoon. For now, it's goodbye for now. Do take care and enjoy the rest of your day. Thank you.